Welcome back to Bunnex Investment Group. In this video, we are going to talk about a simple strategy anyone can apply and can give you 50 pips each and every day, provided you are looking at several pairs. Before we talk much about that, please check out our free signals Telegram channel. I'll leave the link in the description box below where we share free signals, free setups, as well as trading advice. So without further ado, let's actually continue. This is USD against CHF. I want you to spot what has happened before or prior to me putting this arrow to the upside. And you can see as well on CHF JPY, we have an arrow, right? The first similarity is the arrow is at a point where we are experiencing an up move or a surge in the demand of the Swiss franc on this particular case, and in the demand of the US dollar on this particular case. What I'm just trying to say in simpler terms is the market is actually respecting these zones whilst when we have this upward move. So whilst we are building some strategies, we need to find points that have commonalities. What is happening over and over again is what we want to do within the market. So in this particular case, we can see that on USD CHF, we had a 200. My 200 is the one in white. My 50 is the one in blue. All other indicators are part of the market maker trading system that I use and which I also teach. So in this particular context, they are not of application. They are not applicable. All right, so we have a 50-200 EMA cross on this particular case, and on this particular case as well, we have a 50-200 EMA cross, right? After that 50-200 EMA cross, what do we see again? We can see that the market has come back to the 200 EMA, which is this one, which is at this particular point. We had a 200 EMA market retest, as well as on this particular pair. We can see as well that we had a 200 EMA retest, which is this one. So after that retest, what do we see next? We can see that after the 200 EMA retest, we had a pullback to the 50 EMA, and after that pullback, we had a 50-13 EMA cross. So in this case, my 13 is the one in red, my 50 is the one in blue. Right? If we check again on this particular pair, we can see as well that the market from this 200 EMA cross, it came back, it made a pullback to the 50 EMA. Sorry about that. And then it went right up like that. So this is actually a basis of the strategy that we talk about. We are going to look for three parameters. The first parameter is going to be we need to see a 50 EMA crossing a 200 to the upside or to the downside. After seeing that, we need to see the market giving us a reset of the M15 time frame, which is basically a retest of the 200 EMA. After that, we need to trade off the 50 EMA bounce, and then that is where we actually make an entry. 1, 50-200 EMA cross, 2, bounce on the 200 EMA, and then a 50 13 EMA crossover was issued, then a pullback to the 50. Within the right foot times or right foot trading times, that is where we look for a candlestick reversal pattern at the 50 EMA region. That's the same scenario that occurred at this point. We had a 50-200 EMA cross, retest of the 50. After that, we had a pullback to the 50 EMA like that. So from the entry, we've said the entry is done at the right foot times of the day, which is London Open or US Open, right? So let's now have more examples of this particular entry, right? We've said the first thing is to see a crossover, but we must be flexible to see a variation of the theme. Variation of the theme might not mean we are looking for 50-200 EMA cross. Some cases will have a 200 800 EMA cross like that. The EMA or the latest crossover is the one that we respect, and from there, that is where we look to get our reset, right? From that reset, which is this particular point, we had a 50 13 EMA cross and then a bounce on the 50, which was going to give us an entry, right? So our entry was going to be at this particular case, at this particular point, right? After that, we had a 50 200 EMA cross, and then we had a retest of the 200 1350, and then we had another 50 EMA retest, which offered us an entry point, which is at this particular point, right? Going further, we had another retest of the 200 EMA as a sign of 15 M15 reset, retest of the 50 to give us an entry point. So all these points were actually valid points of entry, and they had the potential to give us 50 pips. So you'd see that we had the first 50 pips on this particular day. We do not have a trade on this day. Another pair could have given us a trade on this particular day. Then another 50 pips, another day, no trade. Then this day we had a trade. So basically we'll be looking to get 5 good trades or 5 high quality trades in a week for us to get these 50 pips each and every day. All right, so we've come to the end, and before we close it off, I just want to give you a summary where we are saying we need to see a 50 200 EMA cross, bounce on the 50 as a sign of reset on the M15 time frame, and then we need to see a retest of the 50 in line with the 200 EMA direction. On that note, we come to the end of this video. If you have more questions on this particular strategy, do not hesitate to contact me through the Telegram handle. See you on the next one.